Markets were lower across the board on Tuesday as we did see a lot of selling as a result of some of the growth stocks falling out of favor. In particular, Tesla was the worst performer in the S&P 500 today. Most of you are aware that it's one of the 10 largest positions in the S&P 500 these days, despite not even being in the S&P 500 about a year ago. So its fall today did have a bigger than average impact on overall trading. We also saw a little bit of activity with interest rates, as interest rates are now at their 6-week lows. And so we did see utilities outperform to the upside, but financials underperform to the downside. So we'll take a look at all of that and see what it means for our postures. Keep in mind we've been up 17 out of the last 20 days, so one sell-off day like today is not going to impact the postures too much, but we'll take a look at it nonetheless. And then we'll take a look at a trade application example where I did want to focus on a bearish trade coming from the payment space that's been under pressure here more recently. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's November 9th, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into our description area and sign up for our email distribution list if you're not doing so already. We're also heavy users of Twitter. I would encourage you to follow me at Brandon Van Zee if you're not doing so already. And we really appreciate those of you that click like and retweet on these market outlook related tweets to help us promote our business a little further. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. Let's get a kind of a high-level overview here looking at the heat map for the S&P 500. Just wanted to kind of emphasize through a more visual effect here how ugly of a day it was for Tesla. As you can see here, it kind of stands out like a sore thumb. Keep in mind, Tesla these days is an actual $1 trillion company, and it was down 12% in a day. Both of those things are somewhat, I guess, surprising considering the circumstances. Amazon is a much bigger company than Tesla, and it was up today. However, it was only up 2.5%, so it couldn't completely overwhelm the negative activity there in Tesla. We also saw that PayPal got hurt pretty badly today. I believe it was the second worst performer in the S&P 500, and somewhat similar to the conversation about Tesla, I don't think a lot of people are aware of how important PayPal is from a market cap perspective these days. It's a $241 billion company. It is much more important than its old parent company of eBay, which it was spun off from several years ago. But PayPal was down over 10% today as well. Some of those other payments companies, we'll talk about those a little later, also down here today. When looking for kind of more positive price activity, you can see over here on the lower right-hand corner, we've got a little bit more green than red. And as I mentioned here a moment ago, part of it is utilities and real estate companies outperformed here today as a result of falling interest rates. We did also see more of a defensive tone in trading today, as we see a lot of those consumer staples companies like Walmart and Procter & Gamble and Coca-Cola and Pepsi close a little bit higher here today. But for the most part, this was a risk-off day, a rare one, as this is only the third sell-off day that we've had here for the S&P 500 since starting this whole process back here on October 13th. As you can see here, I'm now looking at chart 4B for those of you that are premium market scholars following along at home. Now, despite today's sell-off of only 0.35% for the S&P 500, you can see that naturally we do still have that strongly bullish intermediate posture, right? Are we a little bit overheated to the upside in the short term? Absolutely. We could certainly see a few more sell-off days here going forward. But what we care about with this intermediate posture, this green line on the market forecast down below, is not what's going to happen in the next 2 or 3 days. What we care about is what's happening in the next 2 or 3 months. And so from that perspective, the trends are reasonably bullish at this point in time. So S&P 500 remains above its rising 30-day moving average with a strongly bullish intermediate posture according to the market forecast. Dow Jones Industrial Average was down 0.31% today. You can see again it's been consistently higher ever since the 14th of October. And, we still have the strongly bullish overall posture. And then we also have price above a rising 30-day moving average. You can see down below here now with the NASDAQ composite, that was down 0.6%, so a little bit worse than the Dow and the S&P 500. Again, some of those growth and innovative types of companies getting hit a little bit worse today. There were some exceptions to that. I did notice Roblox, as an example, was up to an all-time high today, but there were several more growth-oriented companies that were struggling here today. So I'm not entirely surprised to see the NASDAQ down a bit more than the other more widely diversified areas there. But nonetheless, you can see we've got a bit of a bearish engulfing candle here today, where today's body engulfed the last couple of days of bodies on the NASDAQ composite, yet it does continue to have a strongly bullish intermediate posture. You also do see that it's above its rising 30-day moving average. The Russell 2000 was today's worst performer. It was down 0.63%. Again, like all of the other indices, it's been on a tremendous run here since the middle of October. Therefore, one simple day of selling off does not change the posture. We remain strongly bullish. We're just one day removed from an all-time high on both it and the Dow Jones Industrial Average. You will notice here that the Russell 2000 has a strongly bullish posture and is trading above its rising 30-day moving average, but I wanted to point this out down below. We narrowly missed having what's known as a bullish intermediate confirmation signal. Remember, that would have been the case if that red line would have fallen into the lower reversal zone, but it just bounced enough at the end of the day to avoid being in the lower reversal zone there. Remember, that is at 20 and below, and so the red line, the momentum line, ended at 20.31, so about as close as you can get there. So if we do have another sell-off day tomorrow on the Russell 2000, it's entirely possible we do end up with a bullish intermediate confirmation signal. As always, there's a bunch of companies reporting earnings. One that I just posted about there on Twitter, because it's been a bit of a meme stock here more recently, is Upstart. So UPST is the ticker symbol there. Of course, this is the one that was bandied about there on social media about 2 weeks ago when a well-known trader was being interviewed by CNBC, and they asked him, what does this company actually do? And he faked that he couldn't hear the question. And so this stock, whether it wanted to or not, became subject to a lot more popularity than it had been previously the case. Well, when that happened just a couple of weeks ago, it was a $400 stock. You can see that the 52-week high was 402. And again, this was just a couple of weeks ago when that was the case. Well, anyway, they did report earnings after the bell tonight, and you can see that the stock is absolutely getting annihilated. It's down like 20% after hours today. It was already down 6% in the normal session. So it literally lost a quarter of its value. If you were to take a look at its entire day's worth of trading here, it's now $150 per share lower than where it was when that interview was conducted on CNBC just a couple of weeks ago. So tough times there for Upstart, as it's trading now below $250 per share after reporting its earnings. We also had Unity Software, which is probably not all that well known to some of you, but I have a feeling it's going to be talked about quite a bit more as time goes on, now that Facebook has changed its name to Meta and is pushing into the metaverse. Unity Software is a company that can help facilitate gaming in the metaverse and different things like that. So that's a company that you might want to put on your radar. It's a fairly recent IPO, about a year ago. Its ticker symbol is somewhat unique because it's a single letter. There's only 20 plus of those, of course, out there. I don't know if every single letter in the alphabet has stock behind it, but there's not a whole lot of them out there. This one is just ticker symbol U. It reported its earnings after the bell tonight. It's also down, not nearly as violently as Upstart. Nonetheless, it is shaving off about $12 or $13 off of its share price after hours there. This one had been in quite a significant uptrend up until this moment. So we'll see if it can stabilize and remain in an uptrend despite some pressures after hours tonight. And then another recent IPO, and this one probably a bit more well-known, to a lot of folks. And this is Coinbase. This is the company that, of course, helps facilitate cryptocurrency transactions. And like the other two I mentioned, unfortunately, this growth/innovative company is trading lower after hours here tonight. It ended the regular session at 357. It's currently trading just a touch below 320 after hours. So it's down about $40, somewhere thereabouts after hours there. So that's kind of a quick little rundown on a handful of the names that did report after hours tonight, and it doesn't look like it's going to be particularly supportive as we move into tomorrow morning's trading session. Let's get back on track with some more charts now and take a peek here at our 3 green arrows chart setup. And as you can see here, we do continue to have 3 green arrows across the board, whether it's the S&P 500, Dow Jones Industrial Average, NASDAQ Composite, or the Russell 2000. Just a friendly reminder for those of you that might be newer to these videos, 3 green arrows is just a colorful way to discuss 3 different technical indicators and whether they're all lining up bullishly at the same time or not. And so that is the case, or it continues to be the case, and maybe it would be a better way to phrase that, because as you can see with the background colors of this chart on 4D here, when it's green as it is right now, that means that it's had a 3 green arrow signal going all the way back here on the S&P 500 to October 14th, and that's largely been the case with the Dow Jones and the NASDAQ as well. Russell 2000 was a little bit different because it did lose its 3 green arrow status here maybe a week and a half or so ago for just a couple of days, and then it went back into 3 green arrows after that. So point is, this is a very extended 3 green arrows signal for the S&P 500. You don't see them last this long all that often, and that's a direct result of us being up for 17 out of the last 20 sessions, which of course is an abnormality. But we do remain in the 3 green arrow status for the 30-day moving average, the MACD histogram, and the stochastic, with all 4 of these major U.S. equity indices, and therefore the trend trading environment remains reasonably strong as it stands here currently. All right, let's go ahead and pop on over to the internet briefly. I always like to get a chance to say thank you to those of you that help support the Market Outlook presentation. A reminder that David and I do this completely 100% on a volunteer basis. It is a free product out there that you don't have to be subject to advertising and different things like that other YouTube channels will do, as they have slightly different business models than we do. We kind of use a freemium business model where David and I make money at Market Scholars selling premium subscriptions to our everyday trading rooms, but we do a handful of free things like these Market Outlook videos here on YouTube just to kind of spread the word about our organization. And so we do want to make sure that our time that we spend and commit to doing this project is justified, which sometimes can be hard to do. But the one thing that we do ask out of you is, if you want us to continue to do these free videos, click like for us there on Twitter. As long as we're getting up and over 100 likes, I have no problem committing the 3 hours or thereabouts that it takes to do everything that goes into recording these videos. If we're getting less than 100 likes, then I'm less enthusiastic to do that, and I'm just not going to make it as big of a priority as I would otherwise. And so a week ago, you guys got me 90 likes, 10 shy of where we're shooting for that, and therefore on Thursday last week, that's why I only did the write-up here on our website as opposed to doing the video. Doing the write-up itself takes me probably about a half an hour, and therefore I would save myself about 2.5 hours of my day when I only do the write-up and I don't do the video that's associated with it. So in order to be motivated to do the video, we need you guys to be motivated to click like for us there on Twitter. And remember, there's 4 different ways you can go about that process. You can come directly to Twitter and just look at our pinned tweet up at the top of our timeline. And then just click like right below it. If you're watching this video right now on our website, there is a Twitter widget directly below the video that you're watching that you can click the heart on. You can also look at the description area within YouTube if you're watching the video directly on YouTube. And under our description area, we'll have a link to the tweet in question. And then we also do have the tweet in the emails that we send those of you on our notification list, and therefore you could click into the tweet from the email itself. So there's 4 different ways to go about it. Just a matter of whether you're willing to commit the 5 seconds or not to do that for us. And again, for those of you that want me to do the video on Thursday, click like. For those of you that only want the write-up and no video, then don't click like. But thank you to the 90 of you that did that last time around there for us. Also, while we're over here on the internet, let's talk about the sector selector here briefly. Sector Selector does get updated on the weekends. However, those of you that are premium members of Market Scholars do have access to the day-to-day movements using chart 1E on Thinkorswim. For those of you that have gone through the downloads of our premium charts that we offer you guys at Market Scholars. But as of Friday, this can give us a general idea as to any movements that we might have been seeing more recently within the sectors. Now, keep in mind, this is an equal weighted version of the analysis here. So it's a little bit different than what you might be used to with a market cap weighted emphasis. And so one thing that did stand out to me this past week was how consumer discretionary made a pretty significant move from number 6 all the way up to number 3. Prior to that, consumer discretionary was stuck in the middle of the rankings, and some of you that are using XLY as your proxy might be curious about that, since XLY looks fantastic. But as I've explained to you in recent weeks, when we've been doing these Market Outlook videos, XLY is effectively being driven by Tesla, pardon the pun there. But that car manufacturer is driving price activity within XLY because it is now a $1 trillion company and therefore has a much bigger weighting within XLY, but that doesn't necessarily mean that other discretionary stocks are holding up nearly as well. So this graphic here will try to resolve that situation. And prior to this past week, that just simply wasn't the case. We saw Tesla doing really well, but we didn't really see dramatic outperformance out of most other kind of retailers and other types of discretionary companies. But that did change week over week. We are now seeing more broad-based participation within your average retailers and consumer discretionary companies out there. So keep that sector on your radar. Information technology did make its way up to number 2. Was happy to see that, as we currently have 8 total technology companies in my Monday top-down trend trading class that we use this graphic for. So we're already filled to the gills in technology, so I'm really happy to report that it has rallied furiously since kind of bottoming out there in the 8th slot in the first week of October, and now all of a sudden we're up there kind of going neck and neck with energy, which does remain number 1 for the 6th straight week. On the downside, and I should mention that financials had a little bit of a surprising falling out of bed moment here week over week as well. Financials were number 2 the previous week. They did fall all the way down to number 6, and we'll talk about this a little bit later when we get into our 12 grid analysis. But I think the story with that is interest rates. Interest rates have struggled here more recently. Now remember, when financials fall out of favor, it doesn't necessarily mean that it's bad for all types of strategies. In fact, today I taught my dividend growth investing class to my premium members this morning, and we actually did concentrate on the financials area, specifically within the insurance industry within the financials, where we're finding some excellent opportunities out there if you know where to look and you're looking for those good companies that maybe have gone on sale here more recently. So feel free to check out that recording if you are a premium member. It is now posted up here to our trading room's calendar. David taught his directional option strategies trading room earlier today as well. Tomorrow I'll be back in the saddle with factor-based swing trading in the morning, and then David will be doing his options inventory management about midday there. Just wrapping things up here on the sector selector. Notice that communication services stayed dead last for the 2nd straight week. And again, I'll emphasize that this is not just simply a Facebook effect or a Snapchat effect. This is the average communication services stock is doing rather poorly on a relative basis compared to other sectors at this moment in time. Also, real quick, I'll kind of hop back and forth around here a little bit. Normally, I'm not going to, deliver what the stock is that we'll be trading for the trade application until the end of the video. So, but since we're over here on the internet, I did want to show you this now that I had a chance to do so, which is on our stock selector tool, which remember is another one of our premium tools that we offer our members. I just wanted to point out real quick, MasterCard here, ticker symbol MA, is currently ranked 833rd out of 1,000 stocks that we rank under our scoring system here. And you can see that the red color associated with that number means that it is one of the more negative performers out there. And you can see that just back here on July 30th, it was in the green and it was ranked 330th. Then it dropped into that yellow category, kind of in that mid tier. And then it spent a big chunk of time in the last few months kind of in this red. A few times there in the yellow as well. But point being, there's been pressure on MasterCard, which of course is a very high quality company and organization, but from a stock price perspective, we've really seen some wear and tear on a lot of those payments related companies, as we saw with PayPal earlier today, and unfortunately with StoneCo, one of the trade application examples I did for this video maybe a month or so ago, has just done terribly. So it's been hard to avoid the disaster that is the payments company. It seems like they've all been doing really poorly here more recently. So MasterCard, being one of the higher quality ones of the group, is not immune to the sell-off that we're seeing there, and I will be conducting a bearish trade on MasterCard a little bit later in tonight's video. This is part of the reason behind that deterioration of the way that we rank stocks here at Market Scholars from a strength perspective. All right, let's go ahead and get back on track and do some more general analysis here. And let's do some 12 grid analysis, starting with chart 5A. This is our asset class 12 grid. So as this comes up here, I wanted to kind of start by looking at the chart in the lower right-hand corner. As you can see, it's the only one with a dark pink background color. US dollar on the left-hand side here has a light pink background color, but the TNX is the only one with a dark pink background color. And remember, that signifies that that company has a strongly bearish posture, not just a weakly bearish posture. That's a little bit of a change of pace. Remember, for much of 2021, we've seen the opposite. We've seen interest rates rising, and those of you that have played that more bullishly have been on the winning end of the stick, it seems like. But it seems like there's a bit of a temperature change here all of a sudden. A week or so ago, there was maybe some question as to whether it would try to catch a little bit of a bouncing bottom right there at the rising 30-day moving average. That just wasn't in the cards. You can see for 3 out of the last 4 days, we've had aggressive sell-offs there in interest rates themselves. And so where things stand right now is the 10-year Treasury yield is coming in at about 1.43%, which is basically 6-week lows at this point. And you can also see that, of course, it's got a red moving average telling us that price is below a falling moving average here. So it's more than just a random 1 day below the moving average. This has been pressuring the moving average enough where the moving average itself is now rolling over. So that's not a very good sign there if you want to be bullish on interest rates. Now remember, interest rate sensitivity affects different sectors on a variety of ways. Typically what you expect is that utilities and REITs could start outperforming if interest rates continue to fall. That's what we saw today. On the other hand, financial stocks like your banks, brokers, insurance companies, what have you, tend to do more poorly when interest rates fall, everything else being equal. It rarely is, but at least broad level speaking there, you can kind of think in those terms. And so if you do think that this is going to continue moving forward, then perhaps those financials are not going to have the best relative strength, and perhaps you'll be starting to eye maybe the more defensive utilities and real estate investment trusts area. You can see what that impact has on Treasury bond prices now. Remember, bond prices move inversely to bond yields. And so we shouldn't be surprised that TLT is basically up here near 3-month highs all of a sudden. Remember, they were just bottoming out here in mid-October. You had kind of this head and shoulders pattern. It's not a textbook pattern, but you kind of have a left shoulder there, a head there, and a right shoulder there. But that did kind of give away that nice reversal pattern to where we're now all of a sudden back up here to 3-month highs on TLT. Remember, that's not a great sign in terms of risk appetite. Typically, companies, or I should say traders, move towards more boring investments like utilities, REITs, and treasury bonds when there's more chaos in the more risky and speculative companies, like some of those that I discussed after the bell tonight, like your Upstarts and your Unity Softwares and your Coinbases of the world. So anyway, just keep your eye on that possibility that the tone of the market is changing to become a little bit more defensive as we go forward. Also notice we had up moves there in the foreign bond market and also high yield bond market. So all of a sudden, all three bond categories that we have here are strongly bullish, and all three of them also now have a green moving average or price above rising moving average. Remember, it's been a long time since we've been able to make that claim because something like foreign bonds has had a downward trending moving average since going all the way back here to August. So this is decidedly a change of feel of sentiment towards the market and towards bonds at these levels. Other things that caught my eye today were that the U.S. dollar sold off. Now, it's not selling off as violently as interest rates themselves are selling off, but this is the third straight day that the U.S. dollar has been down, and notice that we're now below that 30-day moving average right now. Moving average still rising, so that's why the moving average color is yellow. Nonetheless, we're starting to see more pressure on the dollar here all of a sudden, and you do notice that we have that weekly bearish background color of that light pink there. So switch to the postures to the bearish side of the equation for the US dollar. Remember, when the US dollar is weak, all else being equal, commodities tend to be strong. And we did see that play out nicely today. Take a look at gold here. This is starting to look a lot more impressive. I would not have said that a week or two or three ago, but we continue to see consistent buying of gold. All of a sudden, gold is near 3-month highs here, just like long-term treasury bonds are. And you can see we have a strongly bullish background color. We have price above a rising 30-day moving average. Oil's been a different story than gold. Oil's been in favor for a long time. 2021 has been a fantastic year for oil. And so it continues to work, whereas gold's a little bit more of a turnaround story there. But oil up another 1.5% here today, bouncing nicely up and off of its rising moving average in that case. Bitcoin was down just fractionally today, but let's just call it flat. I do wonder if perhaps the sell-off in Coinbase after hours will lead to a little bit of selling in Bitcoin itself tomorrow. Don't know that to be for certain, but sometimes those highly correlated assets take their clues from one another. And then up here at the top, we do have U.S. stocks, foreign stocks, from a developed perspective and from an emerging perspective. All three of those categories of stocks all sold off today. The worst of the bunch was EEM, or the emerging markets. They were down 0.39%. However, all three of them remain with strongly bullish intermediate postures. All three of them are trading above their rising 30-day moving averages. Let's take a look at the sectors now, and that is chart 5C for those of you that are following along at home. You can see here that we do have a couple of pink charts all of a sudden. Remember, for a while we were getting kind of clean sweeps there with bullishness, but we do have a couple of pink charts showing up all of a sudden, and one of them is the financials, which had been in a very strong territory. Remember what I mentioned a moment ago on the sector selector itself. We saw a pretty big drop off in the rankings from an equal weighted perspective. Well, this is showing us even on a market cap weighted perspective, there is a bit of wear and tear here at the top of the chart. It's been enough to actually change the posture to weekly bearish. Now that could easily go back to strongly bullish as soon as tomorrow if we had a big update in the financial sector. Reason I say that is you can see that the intermediate reading is at 79.71 and falling. So the only reason it's light pink today is because it slipped below 80 just barely. It could easily get back above 80 tomorrow, in which case that background color would go back to dark green. So we'll keep our eye on that, but we do know that there is a longer term uptrend that's still intact with the financials, despite some sell-off here in recent weeks alongside interest rates that have also sold off. Utilities is kind of the opposite. So utilities does share that light pink background color, but unlike the financials, utilities have not been in an uptrend over the last 3 months. You can see they've largely just kind of gone sideways to lower, but more recently they've had maybe some more persistent bouncing in the last month or so as a result of a benefit from falling interest rates there. As mentioned before, they did benefit today. So notice that utilities and REITs were both up today when interest rates were falling dramatically, whereas financials were down. Financials were down 0.55%, utilities were up 0.51%, and real estate was up 0.37%. Between utilities and real estate had been holding its gains much better since this summer when real estate was also in favor, whereas utilities kind of spilled over. So there might be a little bit more catch-up possibility out of the utilities than there is in the REITs right now, simply because the REITs didn't really give back all that much despite interest rates not necessarily working to their advantage earlier this year. So in terms of other charts that catch my eye, wanted to point out consumer discretionary, of course, when we were applauding it on the way up and we were constantly saying this is the Tesla effect, this is the Tesla effect, this is the Tesla effect. Well, now we can also scold it to a degree here. This is the Tesla effect, and that's why this candle here on XLY looks so terrible today. It's the worst candle on the board from the last 3 months. It's because this is what happens when one stock kind of controls an entire ETF's trading activity. And it's great on the way up, but when it gives back gains, it can also hurt on the way back down. Now, obviously, this is still a tremendous looking trend here, despite an ugly candle today. But we will want to keep our eye on it. Does it have the possibility to come down here back to the rising 30-day moving average? I suppose that's entirely possible, right? And if that's the case, then there might need to be a little bit more pain in that particular area. And a lot of that would potentially come from Tesla. Of course, the news over the weekend, for those of you that are not on Twitter, is that Elon Musk put a poll on Twitter asking if he should sell 10% of his personal shares of Tesla, and whatever vote won, he would abide by. And the yes vote won, saying that most people wanted him to sell 10% of his shares. And this is the end result of that, 2 days of selling off so far to start the week after closing at an all-time high there on Friday. All right, let's get into our trade application example now. And as I mentioned before, you already know what it's going to be. It's going to be MasterCard. And so I'm going to come over here to chart 3A for this discussion and pull up ticker symbol MA for MasterCard. So decided to go with a bearish trade here today. Remember that the overall market posture is still bullish, but I'm a little bit leery when we've gone up for 17 out of 20 days. It just doesn't, it feels a little surreal, quite frankly. And I know just from historical measures that does not happen all that often. There's only been a handful of times in history where that's occurred. And so my fear is not necessarily that we're going to, go into a bear market or, wreck all kinds of charts and ruin support levels and all kinds of stuff like that. But I do wonder, after having such a consistent and persistent move to the upside in the overall market, if we're due for a little bit of either give back or perhaps even just going sideways, just to kind of burn off the fat a little bit, because we've been a little bit too hot here recently. So I decided to try to look for a more bearish trade setup here today, and this is the one I landed on. As I mentioned before, a lot of the payments companies have been getting absolutely trashed here recently. So this is not me just picking on MasterCard. All of their competitors have ugly looking charts as well. But today, what we did see is MasterCard rolling over a little bit at an interesting level. That interesting level is the 30-day moving average itself, and it looks to be using that moving average as a bit of a resistance area. Remember, it just hit a recent low here back on November 3rd, and that was a day after putting in an oversold cluster signal. So I tend to think of these types of moves right here, this reversion to the mean, as more of a dead cat bounce that will eventually roll back over. Now, obviously, I can be easily proven wrong on that, and so we have to keep our eye on these charts, as all technicians need to do. But that is the general assumption that I go into this setup with. And so that's how I will move forward with MasterCard as well. Again, I think it's a fantastic company. It's just that its chart does not look overly appetizing right here, given what we've seen with it and a lot of its competitors recently. You can see that it's easily underperformed the S&P 500 over this 3-month chart here. You did have a switch of posture today. So the background color yesterday was blue, switched to that light pink today. What that's telling us is that this blue near-term line on the market forecast is now considered bearish. Yesterday it would have been considered bullish, still in the upper reversal zone. So this sell-off of about 1.44% today, which was underperforming the overall stock market, is maybe causing a bit of pressure on the chart, and it appears like it's trying to roll over at the place where you would assume ahead of time that it might, which is right at that downward trending 30-day moving average. So what I opted to do in this case was to sell a call spread. I believe it was for the month of December that I targeted, and I believe it was the 365 that I sold and the 370 that I bought. Remember, the trade was already done during the market session today, so for those of you that are premium members of Market Scholars, a benefit that you have is access to our Telegram channel, so that way you can be updated to our trade ideas before everybody else who watches the free video later that night. So feel free to check the execution results and all of that on Telegram if you need those details. But the idea behind the trade of selling the 365 call and then buying the 370 call, for those of you that are less familiar with selling bear call spreads, is basically that is our line in the sand up there. 365 is my sold strike. I did get some credit out of it, so technically my break-even's a little bit higher than that. But if you just want to think in simple terms, think that 365 is the level where I want MasterCard not to go. Sometimes it's easier to determine where a stock's not going than where it actually is going. And in a case like this is a higher probability trade because we're selling out of the money strikes. And therefore, as long as MasterCard stays below 365 between now and the middle of December, I should win that trade. Now, if it goes above 365, that's the whole point of me buying the 370 call alongside selling the 365. The long 370 call helps limit my losses to the upside. I will still lose money on that trade if that ends up being what happens, but I won't lose more money incrementally as the stock goes above 370. Because I do have to be mindful of the fact that this is a more bullish time of year from a seasonality perspective as well. So it's entirely possible MasterCard goes higher, and if it does, so be it. Of course, we've got a lot more bullish trades than bearish trades, and so hopefully that would benefit our other trades that we have on. But that was the trade idea for the day. Basically trying to take advantage of this rolling over at the falling 30-day moving average on MasterCard by selling a bear call spread. So that's what I had for you. Hope you enjoyed the analysis. If you got benefit out of learning about the interest rate environment falling today and how that impacted things like bonds and various stock sectors out there, if you benefited from the knowledge that you gained of understanding that the US dollar is weakening and it is improving the prospects of commodities or anything else that I unveiled here for you in the presentation tonight, I ask one simple favor out of you. Just click like for us there on Twitter. As mentioned before, there's 4 different ways to go about that process. If we're up and over 100 likes, I'll be happy to do the video for you on Thursday. If we're below 100 likes, then there's a decent chance that I would just do the write-up for you. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.